What you see on the electronic board is just the price of paper promises. The real value of physical silver is being elevated to a new status by financiers and central banks. I want to ask you sincerely, in the assets you hold to protect yourself in 2026, do you trust gold or silver more? Do you notice that while the masses are still discussing gold's highs out of habit, silver is the one being weaponized and becoming the center of power conflicts between superpowers? Share your perspective and capital allocation plan. Do you believe silver will soon make a spectacular comeback, breaking all psychological barriers to bring profit ratios far exceeding gold once Eastern supply is officially locked? Your stories about preparing or owning these assets are critical pieces for us to identify the face of this fierce asset war. While gold and silver represent psychological fear or geopolitical power, copper is the most honest and raw voice regarding the actual health of the global economy. In international finance, copper has long been nicknamed Dr. Copper for its uncanny ability to predict market booms and busts before official reports are released. Copper sharing the same freefall fate as gold and silver in the final sessions of 2025 is not a technical coincidence. It is a red alert that an economic winter is knocking on the door of 2026 with unprecedented challenges. You must ask, why is a metal considered the core infrastructure and bloodstream of every industry from power grids and construction to high-tech manufacturing being sold off most aggressively among base metals at the turn of the year? The answer lies not in a lack of intrinsic value, but in a severe fracture of confidence in the recovery of global economic engines after a stormy 2025. According to IMF and World Bank reports, the global context is seeing an alarming drop in manufacturing demand that we cannot ignore. Global supply chain disruptions have mutated into trade barriers and chaotic capital shifts, forcing the planet's largest factories to cut capacity. When copper demand in major markets like the US and Europe drops significantly, it leads to a crash in copper prices, reflecting the dismal state of infrastructure industries. Even more worrying is that manufacturing PMI indices have remained below the expansion threshold for months, showing that the world's production engine is clearly losing steam. We must frankly admit that the freefall in copper prices is a confirmation that the extreme tightening monetary policies of 2025 are starting to hit home. Consecutive interest rate hikes by central banks to curb inflation haven't disappeared. They are just waiting for time to suffocate manufacturing businesses through skyrocketing capital costs. Large infrastructure projects are stalled, and industrial consumption is stifled. Copper is the first victim of the market's wrath. The world as financial elites seem to have prepared a script for a period of cautious trial, or what can be understood as a mild global recession for 2026, to reset all price levels and wages. This is a ruthless restructuring where those unprepared financially will bear the heaviest pressure. For an economy with massive openness, like Vietnam, Dr. Copper's volatility will directly impact every order, every factory expansion plan, and ultimately, the actual income in your pocket. When major foreign partners become cautious with spending and industrial investment, domestic businesses will face huge challenges in liquidity and product output. This is when we must look at reality soberly, not to panic and sell off like the crowd, but to understand that the economic cycle is shifting to a harsher state where protecting cash flow and personal risk management must come first. The 2026 economic winter scenario has likely been staged by the moneyed class through these metal price fluctuations. They create a drop to test the system's endurance and eliminate weak competitors. What we see on the copper price chart this morning is just the tip of an iceberg regarding spreading industrial stagnation. Do not be fooled by groundless, optimistic forecasts. Look at the reality of production and freight around you to see what is actually happening. Only by recognizing this brutal truth can you build a financial bunker strong enough to sail through the upcoming storms of the new year. I really want to hear honest, practical shares from ethos operating businesses or working and supporting industries. On this first morning of 2026, do you see signs of orders slowing down or excessive caution from clients? How is production in your specific locality? Does your direct experience match the red alert Dr. Copper is sending to the world? Tell me your story in the comments. Your real-life information is the most accurate evidence to help our communities see the truth behind the cold numbers and make the right decisions for our wallets in 2026. Faced with the gray market picture this morning, I understand that confusion is unavoidable. But this is when you need to set emotions aside and establish a true asset protection strategy in what I call the era of volatility. My biggest advice right now is not to rush into risky speculation to make it back, but to focus maximally on selective conservative thinking. A world where financial rules are being rewritten. Keeping money is sometimes more important and difficult than making more. Conservative thinking doesn't mean you are afraid and stay out of the game. It means you only allow yourself to participate in positions with real value and high liquidity. Avoid chasing virtual fevers or empty promises of profits that left so many empty-handed in 2025. The core technique to survive the rough waves of 2026 is absolute safety portfolio reallocation. Instead of going all in on any asset, even gold or silver, learn to break your capital into different defensive layers. The first layer must prioritize cash and highly liquid assets to ensure you always have resources for essentials and unexpected opportunities. The next layer is physical assets like precious metals, which the elite are silently accumulating. Specifically, learn to take advantage of the irrational price drops caused by mass psychology like the near-Eve crash too. Gradually increase your physical asset ratio. When the market is red with groundless panic, that is when assets with long-term utility like silver or copper are at attractive discounts. However, instead of buying high during excitement, deploy capital patiently. Only enter when indices hit the safe support zones I've analyzed. That is how a brave investor acts. To do this, you must understand behavioral psychology is a weapon the elite always use to control the masses. This is the mechanism that shifts wealth from the pockets of the impatient to the pockets of the financial elite. To go against the crowd and survive 2026, you must train yourself for the necessary coldness toward short-term fluctuations. You must learn to look through the fog of news to see the real value of the asset. When people are afraid, you need to be alert to observe. When people are greedy, you need to be cautious to protect your gains. Your survival strategy in 2026 is not based on luck, but on emotional management and thorough knowledge preparation. I am not calling for extreme actions, but for you to save your own wallet through a realistic and sharp investment mindset. Remember that in an era of volatility, the ultimate winners are not those who make the most money overnight, but those who can protect their assets through the market's brutal cleansing phases. Whether you choose to stand with the panicking crowd or with those holding the physical asset codes will determine your position for the entire year. So, in these first hours of the new year, have you set a stop-loss rule or a safe capital allocation ratio for yourself? How do you define a selective conservative portfolio for your family's specific financial situation? Share your golden rules for keeping a cool head. Your shares not only help you reshape your strategy, but are also a source of inspiration and lessons for others struggling in the financial maze of 2026. Let us build a community of alert investors, those who never let themselves become victims of the sophisticated plucking scenarios of the financier. Closing the first hours of January 1st, 2026. The thing I want you to remember deeply is that the global financial market always operates like a giant chessboard, where the elite are always many steps ahead of us. The brutal drop of gold, silver, and copper on New Year's Eve was actually just a sacrificed pawn in the strategic game of the financier powers. Their goal is nothing more than to wipe out mass excitement, clean balance sheets, and prepare the most favorable position for a new game, a much harsher asset cycle in the coming months of 2026. I want to send you a sincere warning. Never let the haunting red numbers on your phone screen blur your strategic vision. Ticker prices can be manipulated by algorithms and short-selling orders, but the true value of precious metals and industrial materials in a world facing severe resource shortages never changes. When China officially closed the silver export door this morning, they sent a clear message. The era of cheap resources has ended. If you hold real assets with high utility, yesterday's drop was just a psychological test to see who is worthy of continuing to the end of the journey. Enter 2026 with a spirit of steel and the mindset of a master of your own financial destiny. Markets may fluctuate, superpowers may clash, but if you possess the code of understanding and the courage to go against the crowd, you will always find the dawn even after the fiercest storms. Once again, wishing you and your family a brave, alert 2026, harvesting worthy results on the path to protecting and increasing your wealth. Do you want to forget to subscribe and turn on notifications now so you do want to miss any survival codes we will be decoding in the next episodes? Your companionship is the motivation for us to continue unmasking the most brutal truths of the financial world. Goodbye, and see you in the next decoding journeys.